Ever since Donald Trump got elected as the new president of the United States, Tesla stock has been absolutely on fire, being up about 40% by the time that I'm recording this video. But the question on everybody's minds is there actual fundamental reasons that support this higher stock price, and is this high stock price likely to continue to grow in the future? In a past video, I provided you with my price prediction for Tesla, but in this video, you're gonna get the updated price prediction with all the different updates that have taken place since then. Okay, so this was my original analysis that I did in my price prediction video, so you can see all of the different inputs in my model and what the result is, in this case around 287.47. If we refresh the current stock price, which this is using the Y-Sheets formula to do that, we can see the price currently is 338 by the time that I'm recording this video. So this represents a strong downside and something that you should not invest in. But is there any developments that would make this model and these inputs right here different that then will justify this stock price? Well, the answer is that there's absolutely nothing. No, I'm just kidding. There's actually a lot of factors, and we're gonna go through each of those factors step by step in this video. So one of the things that changes, and I think it's very hurtful from Tesla shareholders, is the fact that, as we can see right here, it looks like Tesla is scrapping off the affordable EV vehicle that they were planning to release in the future. I don't know if this is a good idea. I mean, maybe it helps them to focus on the things that matter most, and maybe they can make up the revenue in other different ways. But I was expecting quite a bit of growth from this vehicle right here, as well as the initial adoption of EV vehicles, because I think once you get that first experience, then you may only want to buy another EV vehicle as opposed to go back to gasoline cars. So I don't know if this was a bad move, but this is something that we're also going to adjust in the model, because as you saw right here, what I had planned is that the company was going to release this vehicle in 2027 and generate additional growth. Now, one of the things that did happen and could be a real positive for Tesla is the fact that Elon Musk's brand just grew 10x, extremely fast. So as you can see right here, you probably already know that Elon was a big influencer that helped to push Donald Trump to the mainstream and helped probably to get a lot of votes, in addition to being a big contributor to his campaign financially. And what we can see right here that seems very positive is that 72% of the Republican voters hold a favorable opinion of SpaceX, Tesla, and ex-executive Elon Musk, which is very good sign. I also looked at independent numbers, and it was around 31% of people that hold a positive view of him. So as we can see from the actual election results, we can see that Donald Trump got in total of 76 million votes, which represents about 50% of the vote. And this is a big number in a big base that probably most of them align with Elon Musk's views and approve of what he's done in the past and his personal brand and his mission and whatnot. So if we do the math, 76 million, and let's just keep this at like 60%, this would mean that there's 45 million people that are really big fans of him and could also become, customers for the different products and services that he offers. One of them, of course, the main one being Tesla. So in terms of my actual prediction model, I think this could help to drive additional sales that perhaps in the past the company would not be able to get. Another factor to take into account that a lot of people are talking about is, will Tesla get more subsidies, or will it actually lose subsidies from the new government administration? Well, what I did is I did some research on the subsidies that Tesla is able to currently leverage. So if we sort these subsidies by year, we can see that the subsidies that Tesla is currently getting are at the state level. And these are in Texas, they're not likely to change. But there's really, at the current moment, no subsidies that the company is leveraging that really have a significant impact on the company's financial results or the company's balance sheet or anything like that at the moment, other than the state ones, which are likely to remain the same. So that is very positive. Now, in terms of removal of incentives for buyers to buy electric vehicles, that may actually happen, but Tesla at this point is the biggest fish in the market, especially when it comes to the US. In China and Asia and other regions, perhaps not. I think it's actually going to help the company, and the reason why is because the competitors are not going to have the same advantage that Tesla has at this moment, which is its size and its brand, and it's going to be a lot more difficult to compete with the company. This is why even Elon Musk is against subsidies, because at this point the company is too big where he doesn't need them and it's profitable on its own. So subsidies will only help the competition to become a bigger threat. Now, another factor to consider for Tesla shareholders is that historically, when Trump was president, he was famous for putting a lot of tariffs on Chinese exports to the United States. And so as we can see here, he's planning to do the same when he takes office, which for Tesla could be a really good thing. And the reason why is because if you looked at my analysis and my price prediction of Tesla, you could see that one of the main things to watch out for is the competition, and not just any competitors, but BYD, who at this moment has become the largest manufacturer of electric vehicles in the planet. And so if they could enter the market in the United States and be very competitive, that could be very hurtful in terms of the financial performance for Tesla. But with these tariffs, that's going to be more and more difficult for the company to do, which means that Tesla will get to keep a large part of that share of the market, which is concentrated in the US. The other thing to be a little bit concerned about is the fact that with these new election results, Elon Musk just got a new job, as if he didn't have enough jobs, and that is he's gonna be leading the Dodge project, which is named after like his favorite cryptocurrency that he promotes, and it's a meme coin. But basically it is the Department of Government Efficiency, and in this department, Elon Musk and Vivek Ramaswamy will be in charge of cutting a lot of costs and cutting a lot of people that perhaps are not contributing to the actual objectives of the government. So it's going to be interesting to see how that goes, but the main concern for Tesla shareholders is, will Elon have enough time for all of the different things that he does plus this? I wouldn't be too concerned about this, given that he's probably going to spend less time on other projects, but I don't think he's going to decrease his time from Tesla too much. So I wouldn't be too concerned about this, but this is something to keep in mind as well. Now, the last thing that could actually have a big impact on Tesla stock is the fact that Trump wants to ease the rules for self-driving cars. He believes that this is the future, and of course, this could also be influenced by the fact that Elon Musk is a big supporter and he probably lobbied a little bit for this. So I think this could be fantastic for Tesla, because not only does the company have to solve the technical difficulties of building self-driving cars, but a bigger part of the issue sometimes is just getting the approvals to be able to deploy the technology on a wide scale, and that's something that takes a lot of time and is very difficult. So the fact that Elon has this alliance now with Trump, I think is going to really help. Now it's really come down to, can the company develop the technology and have it ready in this administration, so that way they could launch it. Once it's launched and it works well, they can just keep it and profit for the long term. So I think in my price prediction, what that's going to lead to is, instead of shortening the expected time where this is going to happen, but I'm going to put all of those different factors, I'm going to take them into account into the price model, and we can see what the price prediction is going to be. So now it's just time to adjust the price prediction and see what the result is. So in this case, we're looking at Tesla, everything's good here. Just update this data from the revenue on a TTM basis is coming from Y-Sheets formulas. This is an add-on that you can get on Excel and Google Sheets that allows you to generate the data that you need for your models. Now, in this case, this is the revenue TTM, so everything here stays the same. The revenue growth, yeah, I think 13% is still quite reasonable. I think you could also increase it maybe a little bit. So perhaps here maybe go to like 14%, but I'm gonna keep it the same. Now, the one thing that changes is this year right here. So this is where I predicted that they were gonna launch the new affordable car. It looks like this is not gonna happen. So I think this can have a significant impact here. I think we can expect a reduction in terms of revenue growth. So I would say around 10%, but I think we can make it up once we reach the self-driving car prediction. So let me just remove this here real quick. So now I think realistically where they can launch the technology could be in 2029 and start profiting from that. So this is the new year that we're looking at. Here we have the revenue growth. In this case, I would keep it constant. And then here, this is where I would expect a big jump, perhaps even higher than 30%, something like 35% seems reasonable. Remember, the competition's also going to be stifled with the new tariffs that Trump has proposed and that he's done in the past. So that is it in terms of the revenue growth. Now, in terms of the net income, this is going to have an impact as well. So here we're looking at 13%. I think margins can improve a little bit. I think we can get into like 14, maybe 15% margins. And the reason why is because now the company doesn't have to worry too much about the competition. So I think this is going to have a positive impact as well. And here, this is where we have the margin jump. So 15 to 25% based on the new self-driving, where it's mostly software. I think it's quite reasonable. So this makes sense. Now the probability, the terminal PE, I think is the same. I think if they're able to pull this off, it's going to be quite high. If they don't, then it's going to tank. So it's something that you have to consider as well. But where I think there's a higher chance as well is the probability of self-driving cars becoming a thing. I think we can go from 30 to about 35% now that there's going to be less regulations and that the company is going to have all the motivation in the world to get it done as fast as possible so that it can get approved and they don't have to worry about it in the future. What we need to do next is we had this projection in terms of the value that the self-driving technology is going to bring. We're going to get rid of this as well as the new vehicle. So now we no longer have that. Everything else remains the same. So we're looking at this numbers, this, yeah, this makes sense, 25%. And let's see if there's anything else. A discount rate of 15% is still applicable. You can also lower it a little bit. It depends on what your preference is as an investor. I think 50% is reasonable. So this gives us a present value of 978 million, present value per share of $304 per share. So the price, it is justified that it moves a little bit higher, but I don't think it's justified that it moves that much higher as it is now. So we still have an upside or downside percentage of negative 10%. But I do think that the public is going to realize very soon that this increase in the stock price is not justified. So I do think the stock price is going to drop. So I would keep this on my watch list. Once the stock price drops, perhaps let's say it gets to like $300 per share, I think that is a great opportunity to buy if you're a long-term shareholder of Tesla and you believe on the long-term mission. One more thing to keep in mind is that for this video, as it was recommended based on your feedback, I'm gonna leave the spreadsheet in the description so you can download it, play around with the model. The only thing that I would say is that some of the formulas do depend on having a Y-Sheets add-on, so that way you can get the historical data. But I think that's only going to help you because, as you can see from the models right here, it provides you with all kinds of data that you can also incorporate into your analysis, and that's also important to keep in mind when it comes to the company's valuation. If you have enjoyed this video, make sure to subscribe to the channel, and I'll see you in the next one.